So I was outside, and I've had like 3 of your peers come over to me and tell me to give you a hard time.
I would expect nothing less of them.
So your reputation precedes you, and on that note, I'm gonna, unbutton my, so we can like take this off the cuff a little bit. Are you okay with that?
I'm fine. Until the blood shows. Yeah.
All right, let's have some fun. Allow me to introduce Robin Rowland. From joining Whitbreads in 1984, Robin has developed and led multiple pub and restaurant brands with other leading UK hospitality sector publicly listed companies, including Diageo, Scottish and Newcastle, and the Restaurant Group before joining Yo Sushi in 1999. Over 18 years, Robin built Yo Sushi, an iconic fast casual popular restaurant chain from 3 to 100 company restaurants, both in the UK and US, including 6 franchise restaurants in international airports and the Gulf. In November 2017, Yo Sushi acquired Bento Sushi, based in Canada, creating a $200 million plus annual revenue group. Robin led Yo Sushi's MBO in September 2003, March 2008, and most recently in November 2015. His management philosophy is simple as he agitates for continual improvement on the 5 Ps: people, product, property, promotion, and profit. He's been recognized as the MCA Retailer of the Year, Katie Group Restaurateur, Peach Icon Awards, and received an OBE from Her Majesty for outstanding services to hospitality in 2016. The Yo Sushi team has been recognized over the years for design, company, menu, technology, and as an outstanding employer. Ladies and gentlemen, Robin Rowland.
Can I ask a quick question? Because this is a lot of people talking to each other on stage. Can you just help me a little bit? How many people run restaurants in the region, in the Gulf? Can you put your hands up? So, okay, most. And then how many people run restaurants in the UK? There's a few. Okay, and then how many have run restaurants in the States? US? A few. Okay, just to make sure I know the audience is, so I don't offend too many people. Okay, thank you.
Fantastic. So you joined Yo Sushi in 1999.
Yeah.
They had what, three outlets at the time?
Yeah, the founder had got 3 restaurants away and burning cash. Yeah.
So what potential did you really see in this brand?
Well, if you cast your mind back to the late 90s, healthy living wasn't really much on the agenda, but I saw sushi as unbelievably expensive. It was £100 or $100 a head for most Japanese restaurants, and he was doing it for considerably less, a fifth or even sixth. So I thought that was clever, and I thought this is food of the future, not food of the past. 20 years ago, the world was still stuck in pasta and pizza. I think Italian and Mediterranean food was probably more important to the UK anyway, but I was very keen on Asian food, and this seemed to be the purest example, and it's an extraordinary concept. It's very theatrical. This can move in conveyor belts with these extraordinary variety of plates. I thought, well, you've got to give it a go, because this is probably way ahead of its time. So I was excited by the opportunity, but at the time it was hard to figure out the economics.
Yeah, but for like somebody like me, if you asked me to go to a sushi restaurant with a conveyor belt, and I'm a guy who kind of creates new concepts, I would basically think that that's kind of passé. So what's allowed you to be able, what did you see in terms of that potential, and what's allowed you to stay relevant even though the market dynamics have changed so much over the last 17 years?
Yeah, well 19 years ago it wasn't passé. It was bang on the button. It was right time. And there are 3,500 of these kaiten restaurants in Japan. I think what we've done is we're just restless. I mean, I had a great team working with me over the years, and we constantly evolve the food offer. Design, never build the same restaurant twice. It's boring. So we look at every restaurant differently. And the UK definitely is the most aggressive market, in my view, in terms of landlords being sort of very demanding. So we've managed to maintain relevance. The belt probably is less important than it was 20 years ago. Okay. But the food offer, the marketing, and the fact that 7 million people a year do Yo Sushi and the conveyor belt still, and it's organically grown and had like-for-like growth through all the years, means that we've delivered on a promise. And to me, value is all about that sort of that sweet spot between promising something and delivering it to the right price. And Yo has always, treaded this balance of trying to make sure we make the whole experience affordable and accessible.
So is the conveyor belt still a part of your brand going forward? I mean, is it like to do every?
All the restaurants have still got the conveyor belt. It's still a part of our DNA, and as much as we discussed taking it out. It hasn't gone, but we did buy this amazing Canadian business called Bento, which has kiosks. They got about 600 in supermarkets. So for us, that's a new business stream. And they do a lot of supermarket packaged sushi. So I think Yo Sushi will move into another level. But the restaurants, the DNA is still that belt. But it's less obvious than perhaps it was in the past.
So you mentioned just a few seconds ago that all your restaurants are different. Can you tell me a little bit about that? What do you mean by that they're all different? Because you've grown them, you've been able to scale, and usually scalability means we've got to conform to a certain set of standards. But then you just mentioned that you're not, and that they're all different. Can you how do you manage that expectation?
Well, this is a brilliant business for reverse engineering what makes it successful. And all of us who are old hacks, and quite a few people who've been around the restaurant business for 30 odd years, know that we can reinvent this. The reality is, restaurants are successful where there are lots of people. Genius. So basically, Yo Sushi works in high-end department stores, and that's a UK phenomenon, I think, primarily. Airports, railway stations. I'll come back to design. It's all part of the same thing. And then shopping malls come in. There's a super league, and there's a mid-tier league, and there's a value league. Well, we don't play in the low league, so their work. And then we have some standalone restaurants, destination restaurants. So you probably end up with 4 or 5 different templates of location, which demand a different type of design.
Okay.
And I've got 3 designers. We build 10 restaurants a year, and they have to basically fight for each of the sites. So they have to come up with new ideas every year.
But within each subgroup, there is that consistency of the brand, right?
You'll recognize it. But I guess the other thing is we never bought a business. We apart from this Bento thing in Canada, we built every restaurant one after another. And it's quite rare, and most companies grow through acquisition and basically do conversions of other people's businesses. We just selected every single restaurant one at a time. So, you buy one in Oxford, or you buy something in or we open one in Copenhagen with our partner SSP. We'll spend a lot of time on design and trying to understand exactly what the host environment demands. So technology plays a big part, and every year we approach the year thinking, what can we do differently?
Right. And did you ever expect that it would grow? Like, did you see the potential from 3 outlets to 100 outlets? I mean, did you have that vision when you first joined in '99?
Well, the founder, Simon Woodruff, he just thought it was like opening McDonald's, like shelling peas. He did not understand how hard it is to open restaurants. Me, I thought we'd probably get to about 50, and it's carried on. It's been backed by smart money, who basically thought this is a great financial model, and it's worked internationally as well. So yeah, I didn't really know where we're going to get to, but and I'm not quite sure how. We got a lot of runway still to go, but 100 sites when you got 3, that's a bit of a pipe dream, but we've done it.
Right. And what was that process like? Because I'm sure there's a lot of, I've got, I can't even compare myself to you. I have 5 outlets, but I look at I feel that fear sometimes when I think about scalability and going from 3 to 100. And I think about people, process, technology. I think about the people side a lot, because you need a whole different dynamic in terms of your management team in order to get you there. Would you say that's the critical piece that holds it all together, or what?
That's the Ziz in hospitality. This is not retail. We're not putting stuff on shelves and ringing a till. We're providing a great experience, and we're producing food. These are 2 really difficult things to do. So juggling production and service or hospitality requires extraordinary people, and that's tribal. I mean, I think everyone here in this very, very experienced operator in the room here, they know that most great businesses are run by tribal warriors who basically collect extraordinary people around them, go to battle each day. And they look after their people, and they're obsessed about that. And they're obsessed about values, call it what you like. But they're a shared set of ways you do business. Doesn't matter if you're buying a site or you're basically putting a food on the table. The values should be from end to end. How I deal with a bank manager is the same way I deal with my general managers or a new starter. In our case, it's all about respect. But you build a team on solid foundations, and you weed out the bad eggs really early on. Bad apples can ruin it. And I'm very, very lucky. I sit on a number of different boards with much bigger businesses. And the extraordinary thing is, my small business, and I sit on a board with 1,500 pubs, business with 850 coffee shops, and and it is fat and a Middle East business here. It's the same issue. If you don't have the right people, your business will come unstuck. Whatever genius your CEO you got, you need a sort of tribal warrior who's going to basically pull that team through those difficult times.
Right. What would you say was your greatest achievement and learning experience at your time at Yo Sushi for 17 years? Is there anything you could kind of pinpoint to?
Yeah, making money in 2008 for my team. Because it was well worth it. Because we spent 10 years bashing away at this. And to actually be able to look at my team and say, you've actually now taken money off the table and taken a lick of the spoon under private equity. It was great, and the business are flying, and it was just a moment in time. It was we were all high as a kite on it. We were so pleased, and justly so. And actually, the timing, March 2008, I don't take any credit for reading the markets, but it was the best time ever to take money off the table.
Right. So let's talk about Yo Sushi as an investment, and I know that probably we have some young entrepreneurs looking for private equity money, and you certainly are the man who we should consult or get advice for if we're going to deal with private equity or have private equity investments in our businesses. You led 3 private equity-led management buyouts over the last 17 years with Yo Sushi. Can you tell us a little bit about that journey?
Okay, well, I need a show of hands. Who's backed by private equity in the room? Yeah, all the Brits. Okay, yeah. All right, okay, we're pretty safe here. Private equity is like a marriage. I mean, once you're in, you're in. And you are clearly are giving up a lot of control of your business. But the quid pro quo is you get money which is stable, and you're not having to beg for, bank money every few minutes. So lots of pluses, and they may bring some add value, but I promise you, it'll probably be less than they promised when they made their investment. That's my experience. But the reality is that what it will bring is it'll bring some structure around the business and help you grow. In our case, the first deal was to fund the company for growth, and we did a 6.5 times return in 4 years for our first investor, so they were absolutely delighted. The second investor basically stayed in too long, and that's because of a variety of circumstances. What you need to realize is you're basically allowing a big partner into your life. And as a CEO particularly, you need to be very respectful. My advice is be very honest and very open, and embrace their input. Don't withhold bad news. Give them as much bad news as you give them good news, and then they'll be happy when the good news comes. And I think you just need to realize that you are suddenly in a sort of in a 2-horse race, and you need to work very closely together to get to the end of the race.
So it's like a marriage. Like the private equity guys are like the wife, and she calls all the shots.
Pretty much, she's well. I don't know. I wouldn't be that sexist. I'm very. But I think you are dealing with somebody who also has a different agenda because they have their own investors. And until you understand private equity, it's really a collection of money from the third parties. You really are probably having a problem with the middleman because the reality is that money has to return that money. And you have a duty of care to make sure they can repay their investors.
And it's important that they have a knowledge and understanding of the industry, right? Because I've seen deals in which private equity got involved, but they don't understand the attention to detail and the small, because the business now is that you're becoming larger, but you got to think small sometimes, and.
Well, I think private equity's gotten smarter about hospitality. There's some super smart private equity houses now who understand hospitality, know that you have highs and lows and things will change in the market, competition might become very tricky. They understand more about the regulatory environments. It's a lot better than it used to be. I would strongly advise you only get backed by somebody who understands that the space you're in, because one thing's for sure is how you get from A to B is going to be a different path to the one you put in your business plan. You will change that business plan quite quickly, I suspect, in the first couple of years.
So you went from CEO at one point, and then you were chairman, and then something happened, and then you came back in.
Oh, you've been fed this line, haven't you?
I want to know about Was it the relationship at that time between the private equity that was the issue, that you said it was a bit messy in the middle, that brought you back in again? What was it that you know? I mean, because you tried to get away and then you came back in.
I tried. One of the problems with private equity, it is a marriage you find very hard to get out of at the end, because if you're a significant investor. I became chairman for a couple of years in 14 and 15, and in 2015 we went to a very long process. I would not recommend it to anybody. Short, sharp is what you should be doing. It went on for 18 months. It was a nightmare. I was basically prostituted around the world, meeting lots of different private equity houses, talking about the business, and we were not concentrating on our core business. And the chief executive at the time, she was exhausted. I mean, the poor lady had to basically run our business and had to attend meetings in Paris or New York, and it was just ridiculous. It was unfair, and the business went slightly flat. It wasn't bad, it went flat. But flat's not good enough when you go into a sale process. All the planets have to align when you go into a sale process, like selling a house. It better be the right buyer. You better have the house. Everything has to be perfect in the house, no surprises, no sort of dry rot in the business. And we just had a flattish business. And the sale didn't go through. And I just said, guys, we're in this together. The only way out of this marriage is if I come back as the chief executive with a new buyer. So I basically became a buyer rather than a seller. It was a very tricky situation. You go from the dark side, from being the good guy in the private equity house to being a bad guy because you're a buyer. But that had to happen to make the deal go through. Ultimately, it was the right thing for the business, and I've had 2 years back, and I've just finished at the end of last year, and the business is in great shape. Particularly with buying this Canadian business, it was a very transformational event for the whole company.
Yeah, and during that process, I read in one of the articles you sent me that you actually, to go and kind of understand the business again and see where it was at, you actually traveled to a lot of the outlets to speak to the management and to get a feel for the business.
Yeah.
Tell me a little bit.
Well, I guess like any of the operators here, you know that you can get seduced by loads of meetings with bankers or whatever, or landlords. And I just said to the new owners, you have to forgive me. I don't want to see you for 3 months. Ring me if you want me, but I just need to hit the road. And I spent day after day. I went around all 90 restaurants at the time, meeting every general manager, every head chef. A lot of them knew me from and they seemed to be quite glad I was back, and some were slightly fearful, but it seemed to work out. And it was the best investment I could make, because the business got back on track pretty quickly. Numbers recovered. There was a sense of purpose around the business, and I felt comfortable because I'm like anybody who's an operator. I wake up with a bit queasy in the morning looking at numbers, and I wanted to understand what's behind the numbers. And I couldn't do that without feeling I had some real relationship back with the frontline teams.
So let's talk a little bit about you're wearing a different hat now. You're a private equity investor yourself, right? Is that
I've
correct?
truly gone to the dark side.
Yeah, he's gone on the dark side, which is good news for you guys out here. But so private equity firms are having this love affair with the restaurant industry. We're seeing, I've seen some ridiculous valuations on some of these emerging restaurant chains and businesses out there. What's the fascination with the restaurant business for private equity firms? And secondly, when would you be ready to invest in because there's a lot of entrepreneurs out here at various stages of their lifeline. When's the right time, and what do you look for? If you could just answer two of those questions.
Okay, with my new new hat, there's a company called TriSpan. We raised a couple $100 million, which is the core of the fund. It just invests in food and beverage. I have to do my advert here. I'm the European operating partner. We have an American operating partner. And we are looking basically to invest in growth businesses. Now, our business is investing. It's not venture capital money. It's not startup money. It's not angel money. We're looking for businesses which are probably worth $10 million to $50 million as an EV. So we're looking at growth businesses where we can add operational expertise on sites and people and systems. I'm not there to help people create their businesses. I'm there to be an accelerator or scaler. There are different private equity houses who operate at the level below. There's also the bigger boys who just operate on bigger consolidation plays. And if you want to map out the sector, it's easy in the UK. Everyone knows pretty much who the people are now. I guess for me, I've come to this conclusion, having worked for private equity, why not go on the other side where I can actually hopefully do something good for the industry. I'm not saying it's a bad industry, it's not, but I truly want to work with entrepreneurs who are inspiring and want to be inspired, and I want to help them deliver their dreams to their team and their businesses. And I think if we can get in early enough and we can work with them with mutual respect, then some extraordinary things will happen. And I'm very inspired by people like Danny Meyer, what he's done in New York, and the guys Let's Entertain You in Chicago, and Sam Fox in Phoenix. There are some extraordinary businesses which do need more fuel, and they are in the UK and they're in Europe. And I think in this region there's some good businesses as well.
So you're looking to create the next Yo Sushi? Is that kind of the type of business you're excited about?
We've already invested in a big business called Yardbird. I don't know if people know, it's big, $15 million turnover sites, 3 of those. There's one in Miami, one in LA, one in Vegas. One in LA is about to open. That's a big, successful big box concept. We've basically exchanged on Rosa Mexicana, which is more of a sort of legacy, but really, really good Mexican restaurant business in the States. And hopefully we'll actually exchange on something in Europe in the next month or so, which would be great, because then we're off the races. To have three good brands in our stable, and the quality of the management teams are off the charts. What we have done is not just chosen great businesses, but great people to back. People we think we can have a grown-up relationship with and move quite quickly.
Fantastic. It's been a great honor and pleasure. I'm out of time. I actually really enjoyed I felt like I was having this conversation with you one-on-one. I hope you all enjoyed it as much as I did. I wish we had more time. I had a bunch more questions, but do we have time for questions to the floor, or no, we're not? We're out of time. Perhaps you have a chance to have a chat with Robin on the coffee break. Thank you very much.
Thank you. Okay.